What's up guys, my name's Colin, and in this video I'm going to share with you 4 trading tips that I use to trade cryptocurrency. They are very simple and easy to follow. If you want to see more trading videos, hit that subscribe button. Alright, let's hop right into it. First off, if you're wanting to trade cryptocurrency, you have to decide whether you're going to be a day trader, a swing trader, or a long-term trader. Day traders typically make trades multiple times per day. It could be hourly, it could be every couple hours, or it could be by the minute. Swing traders typically trade in patterns from a couple weeks to a couple months, and long-term traders are looking a year plus. I'm going to share with you a few screen recordings that I made of these patterns that I typically use. The first one is a double bottom, second one double top, third one, falling wedge, fourth one, rising wedge. They are very easy to understand and simple to trade. So for a double bottom, we're going to be looking at the chain link chart. You can see up here in the top left corner. I think this is a perfect example of what a double bottom and triple bottom looks like. So right here, when chain link was around 20 cents, you can see over here on the side, it was sitting around 20 cents. Chain link had a double bottom. So right here, we have one bottom, two bottoms, and then once chain link broke above like this high and this high, it was off to the races. From there, it went up a total of, to the top of the wick, 642%. So for a double bottom, this is a perfect example of what you're looking for. You're waiting for it to, sometimes it can touch it right here, come back down, retest, and then break through if there is enough power and volume in this trade. But look for a bottom and then another bottom. Link also has an example of a triple bottom. So back here in August of 2019, Link was sitting around $1.70 to $1.80, and it had a triple bottom. It had a bottom right here, another bottom, it went up, came back down, triple bottom, and then once it broke that all-time high, which is right here and right here, it was off to the races again. It went up for an additional, to the top, roughly 1,000% gain right there. So Chainlink, if you go back and look at its chart on a weekly, you can get to the weekly by clicking up here and going down to the weekly. You can see it has perfect examples of what to look for in double and triple bottoms. So we can go to Bitcoin as well. This is Bitcoin. And we're on a weekly time frame. Let me delete that. So back here, this was in February of 2015 and August of 2015. So this took quite a while right here. This took approximately 259 days to complete this double bottom. So you can see we have a bottom. Maybe you could consider this a triple bottom, another bottom, and then once it broke through that high of right here, boom, pushed through, came down, retested that line, and then continued upwards. And then from the breakout to the all-time high, that was approximately 6,000%. 6,000, 5,700, somewhere around there. That was a Bitcoin at $317 roughly, and then it was 19,131. So that was a large trade you could have had right there. Next, we're going to be looking at double tops. This was a double top on Bitcoin on the weekly time frame in March of 2021, around there, March, April, and October of 2021. So you can see we had a top and then another top almost at the same area. This one went a little higher, but it's still considered a double top. And then as soon as we broke, we started to break down. It broke down pretty hard, right? So as soon as we broke, especially when we broke that neckline right here, it really broke down after that. So from the top of the double top down to the current point it's at is down 71%. So Bitcoin was almost at 70K right here. Right here it says 68,000. And currently we're sitting at 19,155. And that is an example of a double top move. This is on a weekly time frame. Again, here's a clear example of a double top. As you can see by this, this area right here is the first top, second top, and then it broke down. Here are two clear examples to show the difference between a double bottom and a double top. You have two bottoms. Once it breaks through that neckline, it continues upwards, and a double top is the opposite. Again, here is another example of a double top. This one, the second top went a little higher than the first top, but it's still considered a double top. I feel like I'm saying double top a lot, but you get it. Top, double top, breaks down. This was a double top on the Dow. Top, came down, retested, went back up, another top, and then it broke down. Here is an example of a double bottom on the Dow Jones. So we had a bottom right here, came up, went back down, had another bottom, and then it's looking to break out. So it would follow this pattern right here. Bottom, bottom, breakout, come down, retest, and then continue upwards. This is one of my favorite patterns to trade because it's way more simple. So this is called a falling wedge, which is typically a bullish pattern. So we can draw trend lines from points to points to points, making sure they connect, and same with the bottom of it. And a falling wedge, this pattern could play out over months, days, years, but typically it will trade in between these two trend lines until it reaches the apex or close to the apex of the falling wedge, and then it will break out. So what we would look for is a breakout, come back, retest this trend line, and then continue upwards. These are pretty easy to spot and very simple to trade. On the left side, here's an example of a bullish falling wedge. Typically these are bullish patterns. Again, it's trading in between the trend lines until it breaks out. This one did not come back and retest. It came back a little bit right here, but it continued upward. On the opposite side, a rising channel looks like this. It has trend lines drawn on each side of the triangle where the price point touches it, comes back down, retests, touches it, and then continues. And then almost towards the apex, maybe a little before, it'll break down, come back up, retest, and then continue downward. Rising wedges are typically bearish patterns. So here's another example of a bullish falling wedge. We had a breakout. This candle actually came down and retested and then continued upwards. Here's a clear and perfect example of a rising wedge, which is typically a bearish pattern, and a falling wedge, which is typically a bullish pattern. On both of these patterns, we're going to wait for a breakout and confirmation. If you're just getting into trading, here are a few tips. Have stop losses set. Sometimes trades can be insane. They can go down super fast or up super fast. So make sure you have a stop limit set. Number 2, take profit. If it goes up 100%, maybe consider taking some profit. It's always better to be in the green than in the red. Third tip, never go all in on one trade. You will lose your shorts if it goes bad. Several times I've thought, man, this is gonna go to the moon, when it will go up a lot and then just go right back down. Please take my advice on that. My 4th tip, never use leverage. I've seen situations where cryptos or other stocks can go up hundreds, if not thousands of %. And yeah, you can make a lot of money, but I've seen cryptos go straight to zero. Anyone remember Luna? My 5th tip, you are never gonna time the top and you are never gonna time the bottom. That's why it's always good to get out a little early and secure those profits. Remember, you are trading against other people or big whales, and sometimes those big whales have a lot of money, millions, hundreds of millions, billions of dollars in the market. And if they wanna manipulate it, they can. This is your boy Colton. Remember to subscribe, smash that like button, and I'll catch you guys on the flip. Peace.